Welcome to the Mortgage Warrior podcast featuring Steve Dostal. Host Darryl Smart chats with the Mortgage Warrior about his no-BS approach to financing that is sprinkled in with conversations with other people in the business and around the community. So without further ado, here he is, the Mortgage Warrior Steve Dostal.
All right. What is up, everyone? Darryl Smart with my good buddy Steve Dostal, Mortgage Warrior, and we're back with new microphones. Fine week.
Do I talk to it like this, or do I?
You can actually talk like this.
Or do I talk like
Make
this?
sure your logo is facing you.
I feel like what's his name off of Ricky Bobby? Off of like, how do I hold the microphone?
Wait for next week, and we'll actually be legit with the hangers. I was rushing, so
Wow.
sorry, man.
Well, yeah, my daughter's not here today because we kind of forgot about it. She's not feeling the best, blah, blah, blah. So we have a nice tripod set up over there, which is held up by a box and a knapsack.
Great organization.
It was a great organization.
I was rushing out of the house, man. I was totally rushing.
I'm so
out
glad
of
I'm paying you $500 an episode. I mean, my God, I'm just joking.
I was totally rushing out of the house, and as soon as I got here, no tripod. And I'm like, oh man.
Oh man, what a week! What a week it's been so far. Just a lot of inquiries, refinancing, what the best rate's going to be, blah blah blah. It's been an interesting last couple of weeks since the government of Canada raised their rates a point. So
well, and you've been super busy, and I know we didn't do anything last week because you were busy with people wanting to come in and talk to you about a bunch of things. Is that kind of what was going on?
Yeah, we're getting a lot of inquiries about what it's going to be like. People coming up for renewal, people divorcing, looking to get bought out or buying out their partner, and all of a sudden they get the shock that rates are not 3%, 2% anymore, and now you're getting rates at 4% now for variables, and in the fives for 5-year fix, or even any fixed rate is in the fives now. Right? I mean, you could get lucky and get like a 4.99, but the 4.99 to the 5 is not much of a difference. Trust me.
So with that said, I thought today's topic kind of stumped you on this one because we're going to talk about refinancing versus recasting, or as you would call recasting. What's a better
just
word?
paying extra on your monthly payments, or putting extra on your principal. Like, it's the same concept, obviously. I just never heard it called recasting.
$50 word, man.
$50 word.
It's going to be in the.
My vocabulary is not very big, apparently.
So
not as big as my head, but not very big.
But since we're going to be talking about refinancing versus recasting, we might as well kind of do the definition of recasting. Might as well do that one first, I guess. That would just to kind of, because people listening may not know, because again, people like me, not really sure what that is, kind of glaze over at all this lingo. So
yeah, I will explain it how I explain it to people, because it's clearly, when you tell somebody recasting, they're going to look at me, and like I looked at you and Victoria, I was like, Victoria, what's that word? Because I don't have that broad scope of vocabulary, but realistically what it is, I'm just going to tell you what I do on my property, right? So my home, what I do is I'm in a variable rate, and I knew at some point in time when I renewed my mortgage that the variable rates were going to go up because the Bank of Canada, were aiming to raise rates. So when I did this a year ago, I took the variable for a lot of reasons. Number one, you could break it with 3 months interest penalty if you decide to move, die, or if you get divorced, right? So the other point is that if my payment was around $650 biweekly, I bumped it up to $1,000 biweekly. And what that does is that it pays more of your principal down, and then it costs you less interest borrowed. So with rates being going up, but the fact that for the past couple of years, I've paid down my mortgage on my property and my cottage, the same concept, and my office, same concept, is because when rates do get risen, which the Bank of Canada has done, well then you're paying down a significant portion of that principal already, creeping up to when the Bank of Canada raised their rates. A lot of people don't really do this. But if you have a variable rate, now's the time to kind of put a little extra down, because now you're seeing that you're paying, slightly more interest than you are principal now, because it's gone up significantly since you purchased, right? Or since you refied.
And you've kind of talked about the pros of this. So what are kind of the cons of a recast?
Well, the cons are if you don't have that extra money. That's basically the main
circumstance, right?
Everybody has a different circumstance. If you have that disposable income, to be able to put it down. I mean, I've been doing this for 17 years now, right? So the more I've learned and gained that knowledge, not only from, my clients, but other brokers and other lenders that have, showed me different ways and so on and so forth, is that it's important that you put that extra money down, recasting it, because again, if you have a HELOC on your home, you have access to that extra money too. So if you're putting an extra 10 grand a year on your home as principal, then you can actually borrow that from your HELOC now.
Is there a best time to do a recast, you think?
Yeah, I mean, I think most people get a substantial or mediocre or medium-sized tax return.
Yeah.
Right. Most people that I've talked to will take that tax return to slam it down on their principal, because then that helps with, your amortization comes down a little bit. The more you pay down on it. I mean, most lenders are 20% without penalty.
Yeah.
Right. But most people don't have that 20% to put down a year anyways. So realistically, recasting it is a good option to help keep your payments, before the interest payments go, way higher than what you're paying on principal.
Yeah. So with that said, we'll talk about refinancing, and again, for those people that really don't know what refinancing are, people like myself, because I let my wife do the work on that one. Just to kind of the listeners, what is refinancing?
So refinancing means that you're going to take some equity out of your existing property and use it to either clear up some debts, CRA debts, renovations, or investments, or lending it out to other people who want to buy the properties. I mean, refinancing is a good option if you're drowning in debt and you're making minimum payments only on it. Yeah. Sure, you're rolling it into your mortgage and you're extending it by 30 years, but at the end of the day, would you rather live for today, or would you rather just keep paying interest to these banks? Because it's funny, because the fact that we're talking about this is that my bank, which is BMO, all of a sudden I get a thing in the mail here last week. It's like I've been pre-approved for a $50,000 unsecured line of credit, and I'm like, holy cow, right? If I was just some guy off the street or whatever, and I get that in my mail, and you're like, my God, that's 50 grand I could use. And you're thinking, well, that's a great idea. Well, the problem is that if you're not making $50,000 a year or more, how are you ever going to pay this down? You go borrow that whole $50,000 down, and and a like a personal line of credit isn't going to be like a secured line of credit, because you're going to get paid. You're going to pay a higher interest rate. So now you're paying interest only on $50,000. The banks love you for that. That's why banks are existing. They don't give
their chops at you. Almost,
my God! They're like, oh my God! I hope that guy come and get this $50,000. We want it like this.
And the mic's really working well on that one.
I just feel really weird holding this in my hand. But anyways, the realistic thing is that we have mortgage solutions for all credit types. So it doesn't matter if your credit's beat up. Doesn't matter if you have a 900 beacon score. We have solutions for all credit types, and we pride ourselves on getting the solution. Even if your bank has declined you or another broker has declined you, it doesn't hurt to have a second set of eyes or even a third set of eyes just to look at it, because when you're dealing with a refi, again, everybody's situation or circumstance is different, right? We have self-employed people that are coming in here. We have people that have been in their home forever, but their income hasn't changed enough for them to go to a traditional bank or an A lender. So we put them in what we call a B lender, which is a subprime lending. But if your credit's decent, you have lots of equity, well, then there's solutions for you. Mainly it's the equity, right? You have to have the equity there to be able to refi.
Well, and it's interesting, when I was researching what we should talk about this week, one topic came up, and it kind of ties in with this and what you just said about there is no such thing as a bad time to buy a house or refinance or anything like that, because it all depends on your situation.
Yeah. Do I recommend people buying a house when the rates are this high? I'm not a realtor, so that's not my job to tell you whether or not you should or shouldn't buy a home. But my job is to tell you what the rate's going to be and what the payment's going to be, whether you can afford it or whether you're going to be strapped and going to be house poor. That part I will help you with. I will let you know, listen, you're overextended here. Maybe you shouldn't be buying this home. But again, people will listen to the advice, but some people will say, thanks for the advice, but we still want to go forward with the purchase that we have, right?
Well, and it's one of those things that, as you were saying that, when someone comes in to talk to you, what are some of the questions that you will ask? Because obviously people have a ton of questions for you and want the advice, but what kind of questions do you ask? Because again, you're all about trying to get that personal relationship, and a lot of the people that you do know that come into you and want some help, what kind of advice do you give, or what kind of questions, I guess, you would ask?
Well, I mean, the basic questions is, what's your credit like?
Yep.
What do you do for a living? How much do you make a year? Are you self-employed, or are you salary, or are you hourly? Mm-hmm. Right? Because the salary is okay, because obviously you're going to know exactly what you have. There's no overtime or whatever. But the hourly people, right? You could have, like I'll use Toyota as an example, right? They have mandatory overtime. Mm-hmm. Right, you could be working all the way till Thursday, and they're like, "Well, you need to come in Saturday for 8," and you're like, "My God, I got Timmy's birthday," and whatever. But realistically, a base salary at Toyota is, they're $20-$30 an hour, and then they have all this overtime, which could put them up in the $125,000 a year range. So then I can use a 2-year average. So, so basically it's those questions is like, what do you do for a living? What's your credit like? What's your income? Mm-hmm. Do you own any other properties? You know what I mean? We have to put it all together in the application. Yeah. And then we have, GDS and TDS, which is your gross debt service ratio and your total debt service ratio. Yeah. So your GDS on, prime lending, which is with a bank, can't be higher than 39% of your income. Right?
In a circumstance like that, where you were saying that you don't know if someone's income just because of it fluctuating, how do you determine that? Do you go by the base, or do you kind of go in the middle of what you could possibly make?
Well, that's a great question, Darryl, because what we do is we ask for either your T1 generals, notice of assessments, or your last 2 years T4s. Yeah. And you combine them together, divide them by 2, and that's what your average income is for the last 2 years. Yeah. So if you're self-employed, right, you know what I mean, you need a 2-year average, for prime lending if you claim enough. Yeah. Or if you don't claim enough, then I can use your bank statements to show what you earn. Mm-hmm. We don't care what comes out of your account, we only care what goes into your account. Mm-hmm. Right? I mean, everybody has bills, everybody has stuff they have to pay for. But realistically, I mean, if you're an hourly worker and you're busting your butt working all that overtime, as long as you have 2 years of working that overtime, we can, use that income. Mm-hmm. The other questions we get a lot is part-time income. Yeah. Part-time income is a tough one, or contract is a tough one. Yeah. But as long as you're working at the same company for the last 2 years, we can use a 2-year average as well, as long as you're with the same company.
So are there advantages to being self-employed? And it's one of those funny things that I know that I'm kind of encountering now, because this is my first full year, even though I've been around for about a year and a half. But are there advantages to being self-employed?
There are. I mean, one of the biggest things is my broker G-Van stated to me, and it's a good analogy, is that if you are self-employed and you don't want to pay all the taxes that the government wants you to pay, and you don't want to show exactly what you pay, well, then you're going to pay a higher rate with a B lender and be charged a lender fee and a brokerage fee. Or if you want to show the government what you make and you want to pay taxes on your $150,000 or $250,000 or even your $500,000, well, then you can use that average, and that's provable income, which means I can put you into the prime lending and there's no fees, and you can get the best rate out there.
And the only reason why I was asking, because it seems to be a trend, people becoming more and more people are being self-employed. So, and it's one of those things that you don't think about. You think about the business aspect, but you don't think about the intangibles of living, right? For the better sense. You know what I mean? So, in that respect, and we'll talk about refinancing, there's different terms. There's 30-year terms, 15-year terms, things like that. What are some of the advantages or disadvantages of going 15 or 30, or who should be doing that? And I guess it depends on the situation again.
Again, it's all situational, right? Yeah. It depends on your income, right? Depends on how much debt you have, right? Yeah. I mean, people have buying these monster trucks that are, $100,000 a year, like $100,000 trucks. Yeah. So you're like $800-900 a month, right? So it really all depends on your situation, right? If your situation warrants a 30-year because you can't get a 25-year, then obviously we're going to put you in the 30-year, which means it takes you 30 years to pay off that mortgage instead of 25. Yeah. So this is where the recasting comes in, is where... Yeah.
You just know
what I mean? Is that if you do bi-weekly, it shaves off some amortization. If you do weekly, it shaves off some more amortization. Mm-hmm. If you recast and you add more money to your principal, that shaves off amortization. Yeah. So it all ties into what you want to do. It just, again, it's all situational to who you are and your income and your flexibility on being able to come up with that extra money.
That's perfect. Well, I guess you kind of answered the questions because there's pros and cons to everything, and not one size fits all, and not one situation fits all. So, and again, refinancing. The topic today, just about refinancing versus recasting. Again, it's not a battle; it's more of a choice, right?
And it's just being informed. Honestly, if you got any questions, there's no dumb questions here. We'll always answer your question, and if we can help you, we will help you. If we can't help you today, we will give you the tools and the advice to help you in the future.
Well, and I was just gonna say, if things don't turn out now, at least you're there to help them in the future, right?
Absolutely.
So where do we reach you?
Go to themortgagewarrior.com and let's get started.
Awesome. Well, with the new microphones, I think we did it. Pulled her off, I think.
Drop it.
Mic drop it.
Just joking. We don't want to do it.
Thanks for joining us, and we'll see you in the next episode.